the situation in the West is not very good given the high interest rate environment nowadays, and now you have China going through, I think, a crisis that started 2 years ago. If you
Most asset classes are down on Tuesday as disappointing data comes out of China. We'll be talking about the ramifications of this on gold, stocks, and Bitcoin with our next guest, Florian Grummes, Managing Director of Midas Touch Consulting, an expert on analyzing these markets. Florian, welcome back to the show. Good to see you again.
Thanks, David, for having me. Pleasure to be back.
We appreciate you taking time out of your summer holidays to speak with us and give us valuable information, Florian. A lot of data coming out of China this week. Now, as you know, earlier this week, the People's Bank of China cut their interest rates unexpectedly. Now, on Tuesday, today, disappointing data came out. Industrial output rose by only 3.7% in July, which is below consensus expectations. As well, retail sales rose at a slower pace at only 2.5%. Earlier this month, China released details of their inflation status, and they actually had deflation, which doesn't signal growth. What does this mean for, let's start with the broader economy, whether or not this has an impact on the rest of the world?
Well, of course, it has an effect or consequences for the rest of the world. I think it's important to remind ourselves that after the financial crisis in 2008, it was China that basically pulled out the West from this very miserable situation, and the growth in China helped the West to come back on its feet. And this was also massively driven back then by investments from Wall Street into China. And nowadays, we have a very challenging geopolitical setup, and it's not as easy as it was back then to do business with China anymore. It's also important to understand that the lockdowns in China were much longer and much harsher than in the West. And they have led to much greater unemployment, and I think also damaged the psychology much stronger. And yeah, I mean, the situation in the West is not very good given the high interest rate environment nowadays. And now you have China going through, I think, a crisis that started 2 years ago. If you remember, back then we did an interview talking about crashing real estate environment, and we talked about the ghost cities in China, basically, which were one of the effects of all this money coming to China, going and being channeled into properties and real estate projects that didn't really make sense. And now you see, of course, that in a rather controlled, centralized, socialistic kind of economy, it's very difficult to get back on its feet because the swarm intelligence of the free market is missing. That is something that has helped the West over the last 2 years to come back on its feet. This is missing in China. You have local governments trying to control everything, and you have Beijing trying to control everything. But I think the problems are severe. You hear that the shadow banking sector has severe problems. I think we can name it. It's deflation in China, and the problems that started with the imploding real estate bubble are getting more and more severe, and that has consequences for the West because imports from the West are falling, and usually in such a case, you will hear the warmonger sound louder and louder to basically distract from internal economic problems.
So you think there will be higher geopolitical risks as a result of internal domestic economic slowdowns?
I think so.
Okay. Are you referring to perhaps the China-Taiwan Strait issue where maybe tensions might rise there?
Yeah, I mean, this is an ongoing, unsolved issue. It's a highly complex situation. I think you know it better than I. I don't know what the solution is going to be there, if there is any solution. I assume that this is going to intensify over the next few months and very likely years and probably even months. Yes.
People in the West, let's talk about the US markets. People in the West are wondering whether or not deflation from China could be quote unquote imported into the US, which is to say that perhaps if Chinese demand is weak, then like you said, imports from the West may go down as well. Now, keep in mind, though, that a big chunk of the Chinese GDP is still from manufacturing and exports. So I wonder if that segment, the manufacturing, the export side will be affected, and ultimately whether or not inflation from the U.S. will be affected from a weaker Chinese economy.
I'm more in the camp that we're moving towards stagflation in the Western world. So as you can see, and this is also nothing new, but I think we are now hitting the so-called sticky part of inflation. It will be difficult to bring down these numbers much further unless you completely destroy the confidence in the markets, which then will lead to a massive crash, which they also don't want to have. So and at the same time, you see like countries like Saudi Arabia demanding high oil price. Oil has recovered nicely over the last few weeks. So, and one of the main key drivers nowadays, I think, is just that people are not willing to accept low payment for their work anymore. So that's something that, first of all, it's very difficult to get good people. Or people at all willing to work, and if they want to work, they want and demand a high salary, and that has definitely caused partially this inflation that we have seen over the last 2 years, and that will remain sticky, and this is not going away. And wherever I turn my head personally in my own life, I can only see rising prices. Everybody's rising its prices, and nobody's willing to lower prices. So I don't think that we're going to see imported deflation from China anytime soon. But what we're going to see is rather a remaining inflation on a level, I would say something between 3 and 4%, and diminishing growth or actually severe growth problems.
In 2008, when we had the great financial crisis in the U.S. economy saw a brief period of deflation. Didn't last very long, but there was a quarter or two where there was deflation. Now, Florian, why can't it happen this time? Why must we have stagflation? Suppose we have a recession in the U.S. Why couldn't the same thing repeat from 2008?
No, of course it can. I mean, I also have no crystal ball. That's what I see right now. Of course, if you look at the stock market, I think we have seen a top just 2.5, 3 weeks ago. Interestingly, exactly on that weekend, there were sentiment numbers showing like extreme greed and optimism among the so-called dump money, the retail money. Everybody was in the stock market. The AI boom had driven prices in the sky. And now we have a turnaround. I think we've seen the top, and people have been talking for nearly 9 months that there is a crash coming, and they've been most of the time super bearish. Last interview that we did, I said this is actually a contrarian signal, and the markets will move very likely higher just because there's so much fear in the market. But this fear has gone, and now we've seen actually the opposite. So if the markets would now typically also remember seasonality into September is weak, is actually the weakest month of the year is September. So if markets continue to pull back and start to correct, this can definitely move into a deflationary move if markets really start to crash. I don't see a crash right now, but we also have to be clear here. The Fed and Mr. Powell seem to still believe that they can manage and maneuver and control this highly complex economy by raising or lowering interest rates, which I personally believe is totally absurd to believe in, because the economy is too complex for a group of a few people to understand what's actually really going on. And I think that they totally overestimate their hand right now, and they're on the way to destroy it, because these high interest rates, I understand that it makes sense and they're trying to save the system, but I think that it's way too late and you cannot save that system anymore. And I think they are on the way to break something again, similar like what we've said about a year ago. Finally, it happened in March when a few banks went bankrupt and you had a bank run in America. And I think we're going to see something else, most likely out of the commercial real estate sector in the next 6 months. And then it's all a question of psychology. And if people freak out and get really afraid, then you can also have deflation, right? That can happen, yes.
I'm not saying that the Federal Reserve is going to do this, but just hypothetically, if they lower rates, if they cut rates starting in September, let's say, do you think inflation will return right away because of lower rates?
It could be, yes, it could be. It could be that the casino starts again immediately. And it could also be that people suddenly realize, like, wow, it's serious now. They have to lower interest rates, and then markets really start to sell off. I mean, that's been also something that we've seen in 2008, that actually when they started to lower rates and actually try to help the markets, the initial reaction for the following 6 months have been even a more severe bear market. And only when you had a completely bombed out sentiment and a harsh sell-off for months and months, then finally at some point the markets turned around and the monetary policy had changed already, I think 7 months before that.
The reason I asked that question is because the Federal Reserve is probably asking themselves the same question, which is what happens if we cut rates soon rather than later? Will inflation return right away? And I think by what Jerome Powell has told us, they've made the assessment that it's better to wait to cut rates because they're afraid of that scenario that you just described, casino money returning right away, right? Which would push up inflation and undo their work. So the question is, Florian, I'm sorry?
I understand it. But remember, I mean, we have seen a very important lesson in March. It took one weekend, a bank run and 1 weekend, and everything they had done for a year was basically thrown out of the window, and immediately 500 billion were printed. So this will happen again because the pain will be too big and too high, and there will be too much pressure on Mr. Powell and the Fed.
Do you think the gold market at its current price is signaling any sort of moves from either the Federal Reserve or the dollar or interest rates?
Yeah, I think over the last 3.5 weeks, we've seen a pullback in gold, which went a little bit further than expected. And that to me signals a little bit more that it's time to be cautious here. I mean, we have to be aware and really look very sharply what's going on in the markets now. I think as I said before, we've seen a turning point in the stock market end of July. And most likely we're going to get this correction towards September, maybe mid-October, maybe even a little bit longer, which in the worst case could also move into something much bigger, but that's not what I'm seeing right now. But gold is telling me that initially I thought we had this top in May. As anticipated, gold corrected back down towards, roughly speaking, 1900. We got the first leg out of that bottom, 1987, just 3.5 weeks ago. That was all according to plan and looked nicely. And it looked like the summer rally had started already. And a pullback was also expected, but this pullback now has come back today to 1896. So it has missed the low from late June by $3, which is still okay. It has met now the 200-day moving average for the first time since December last year. So for 8 months, basically, gold has done bullish trading above the 200-day moving average. It's still rising, this important moving average, and it's important because so many people look at it. And it's also okay to pull back, and usually that should basically be a support now, and gold should turn around and start rallying again. If it does like that, perfect, then we are in the summer rally and we can probably see $2,000 rather soon, maybe already in August or then in September. And then we should also get the breakout towards new all-time highs in the third or latest the fourth quarter. However, this pullback over the last 3.5 weeks, as I said, has been rather deep. And I didn't see any real bounce or any strength anymore in gold. So What I'm looking now is I want to see how any recovery is basically behaving in gold, and gold needs to regain this $1930 level very soon. That would show me, okay, everything's okay. We just made a double low at around $1,900. And sometimes it's good to have 2 feet to stand on, right? So that's fine. But if gold cannot regain this $1,930 with confidence, which means a daily close above it, then that tells me there is more weakness in the market. And that would also tell me, oh, be careful. We probably have more deflationary powers moving into the markets, and we don't get this summer rally and break out 2 new all-time highs, because the stock market has turned around, and suddenly liquidity is draining, and you want to be careful. So we are in an interesting inflection point now. I think the next 1, 2, 3 weeks will be very telling how the whole thing is going to continue towards the third and then also the fourth quarter.
Do you think that the dollar will continue to strengthen and perhaps weigh down on the price of gold?
Of course. I mean, the dollar and gold, they always play together. A stronger dollar most often means a weaker gold price, while a weaker dollar means most often a stronger gold price. It's not always like this, but there's definitely that correlation. You have we didn't touch upon that yet, but we also have this meeting coming up on the 22nd of August. This could change everything, and could send gold dramatically higher within a few days. It could also mean that it's a nothing burger and gold continues to sell off. I'm sorry that I have done any more clarity here, but we have to see how the BRICS nations basically, what they're gonna announce or what they're gonna come out with.
What news do we have to watch for, Florian? Like what would they do that would signal higher gold price or send gold higher?
So it's going to be a very high-level meeting of these BRICS nations. And I think there has been a lot of talks among ministers and normal government employees over the years among all these nations. But now on the 22nd of August in Johannesburg, we have this high-level meeting. And it is supposed that they're going to announce something. Because you have to understand that these BRICS nations, and there's a lot of countries applying, and they want to be also part of this group. And altogether, they have more than $1 trillion of trade surplus against the West, meaning they export more than they import. And for the difference, this trade surplus, they're receiving basically US dollars. And the dollar is backed by nothing. It's basically a paper fiat money. And as we all know, the dollar is losing purchasing power over the years dramatically. So that doesn't mean if you look at the currency pair dollar against euro, that the dollar necessarily has to be much lower. But the dollar against gold, the dollar against real estate, the dollar against hard stuff, the dollar against lots of things has lost its purchasing power. And all these countries have given their commodities and exported electronics, like China, for example, and have received, in the end of the day, paper money. And I think they are now at a point where they're just tired of it. And seeing that America can sanction Russia 1.5 years ago, when Russia marched into Ukraine, basically told them that their money is not safe anymore. And that told them that the Western legal system, what it used to be and what made the West so strong, is not what it is anymore. Because 20 years ago, such a move would not be possible. You would have to go through all the instances to basically take the Russian money. Nowadays, they just did it. Something similar, another example, Credit Suisse. The Saudis invested more than $1 billion. A year later, the Credit Suisse is taken out by the UBS, and there's no real process, and they just lost their money. These kind of moves basically have led to a loss of confidence in the Western world, into the Western world. And of course, those countries and nations, they export commodities, they export their hard work by producing products, and they say, okay, what should I do with these paper dollars? So they will come up with something, and then it's supposed that it is going to be something that has to do with gold, that it's not going to be a gold-backed currency itself, but they probably have like a trade account with each other, and they're going to probably connect that to a price to the price of gold in US dollar. So that means that you will still have the Chinese yuan and the Russian ruble, and all these countries will have their own national currencies. But at the same time, it's somehow going to be linked and backed to the price of gold in grams in US dollars. Something like this is going to happen, most likely. And the question is just how hard and quickly they're going to pull this off. So it could be a very brutal move just over the weekend, basically, or it could be something that takes years and it's more like a step-by-step, slowly, cautiously moving forward.
Okay, can we just back up a minute here? So what would be the advantage for the BRICS nations to develop a common basket currency, whether it be backed by gold or something else? Why can't they just transact peer-to-peer, country-to-country using whatever pair currency that is necessary for that particular cross-border transaction? You know, they don't have to necessarily use the dollar as a common denomination, but let's say if China and Russia were to trade with each other, they can just use the rubles and the yuan, right? Why do we need a common currency is my question.
That's what they're already doing, and they settle any surpluses or differences by, for example, and we talked about this already, if you are a Russian or a Saudi and you're selling your oil to the Chinese, you get the renminbis, and then you can go to the Shanghai Gold Exchange and use these renminbis and buy physical gold. The Chinese most likely will store it for you in their Shanghai Gold Exchange, but that's already in place. But what they want is that these trade surpluses with the West are not simply settled in paper money anymore. So that's going to be the big difference. And the question is, again, how hard they are going to pull this off, how quickly, how violently, and is the West able to negotiate better terms, maybe, or not? And my fear right now is, looking at the West, I only see warmongers. I only hear people screaming more war, more weapons, and nobody is trying to push diplomacy. And that's actually not a good sign.
What would be a better solution for the BRICS countries, a gold-backed currency or a crypto-backed currency?
I think it would be right now a gold-backed currency. I think, which crypto would you like to pick? Bitcoin?
They can make their own. A BRICS token.
I mean, that's the general problem with most of these crypto tokens, is that they're worthless because somebody just created them out of thin air, and then maybe, like with the PayPal stablecoin, they can freeze your assets whenever they want. So you have to be very careful. I think the only really valuable crypto decentralized is obviously Bitcoin, and there's only 21 million going to be around. So I'm not sure if it's a good idea to back into Bitcoin, especially if you don't have a lot of them. And the rest of the world, all these nations also don't have enough. So,
you know, one asset class that hasn't been rallying is Bitcoin. It's been rather flat, actually. Why do you think that is?
I mean, that's also true for me personally. I think a lot of confidence has been lost in the crypto sector, generally speaking. There has been just so much scam and so much bad projects, and so much money has been lost. And basically I mean, this has been true in the other cycles as well, like altcoins, at least 90% from the top down, right? So this is hard to accept. And most of the people who have invested in crypto have lost money over the last years, which is somehow absurd if you think that Bitcoin comes from a few cents, went up to 69,000. You had a lot of opportunities to buy in rather cheap. But most people bought in above 20,000, obviously. And I think that's one of the main reasons. And The other reason is, I think, the attack by the SEC, and I think the regulation and the problem with the on-ramps. It's just not easy anymore to invest in crypto. I mean, there are still countries where it is easy, but in many of the big Western countries, it's getting more and more difficult. And of course, people questioning the security of it and questioning whether they will be able to get their money back. I mean, to look at what's going on with Binance for weeks and weeks now, this is all not building trust. It's actually the opposite. So I think that's one of the main reasons, probably, because, and that's also been my base scenario, my scenario for the year. Based on past performance, of course. If you look at the bear market from 2018, Bitcoin went down from $20,000 to $3,200. Nearly the full year of 2018, it finally bottomed in December, and then staged a very nice bounce and a very nice recovery, and it recovered 61.8% of the bear market. And I thought something similar should be possible. That's what I thought in January. And that's why I said Bitcoin will recover to 25 and then to 30. And then the next numbers were 35. And I thought maybe even 48,500 should be possible. But that would be the 61.8% retracement. So that was my thinking in January. And then it happened. At least that it started nicely. Bitcoin is up. It's the best performing asset this year. But it has been slow over the last few weeks. We didn't see any movement, basically, and it's been rather challenging to break out above this 30,000, 31,800 kind of resistance zone. And let's see. I mean, if the stock market gets in trouble, unless the Fed is coming, pivoting and printing again, so going back to the casino, unless this happens, I think Bitcoin and the cryptos will also have a problem. And if you look at what's going on, at the end of the day, we don't see a lot of volume anymore. There's not a lot of liquidity. There's no new liquidity coming into the sector because the on-ramps are closing or are in trouble. They basically are in stress with the SEC, with the regulators. We barely have any volatility right now. We are in the summer doldrums, but the total value that is locked in the sector has actually not changed over the last 12 months. So that means there's not any new capital moving into the sector. Trading volume is down by, I think, 75% compared to 2 years ago. And then you also have to consider that you have a lot of fake volume where people trade derivatives, or you have all these big exchanges basically posting trades that are not really happening, or they're trading with themselves. And seasonality is also very bad for Bitcoin. September usually is the worst month of the year for Bitcoin. So it's not right now a situation where I want to be super bullish. But on the other hand, all it takes is like $2,000 to the upside, and the picture improves dramatically. So and there's another thing that we have to be aware of. Until now, from January, you basically had 3 big weekly green candles. If you missed those 3 candles, you didn't make any money. But if you did, the first one was in mid of January when Bitcoin quickly pushed up to nearly 25K. If you were not invested, you missed the move, and it was very hard to get in. The second one was mid of March. Again, within a week, Bitcoin pushed higher from, I think, 19K to 28K. When the banking crisis happened, and over the weekend they decided to come up with a big rescue package. And mid of June, you had a third big weekly candle with the Bitcoin ETF. And again, if you were not invested, you missed most of the move, and it was basically very difficult to get into it, and you would bought way too high. So the challenge is you need to be invested, but I would also say like not too speculative at the moment. So that's my setup right now. I still see a chance, and I mean, there's also another very important lesson this year that Bitcoin has strongly reacted to this rescue package in March, showing that it is now a safe haven kind of asset. So if the Fed is coming to save the market at some point later this year or early next year, Bitcoin should explode higher. And of course, if the Bitcoin spot ETF is getting its green lights, it will change everything as well.
generally for any asset, when you see a big push up in the year, followed by a period of consolidation, is that a signal for higher or lower prices, or is that not a signal for anything at all?
It can be. I think it depends on the character and the style of how it's basically correcting or consolidating the move that had happened before. And right now, I feel like it's very tenacious, the markets now, as well, what gold has been doing over the last few weeks. So um, it's not really confirming to be very bullish at the moment. I think probably a little bit more cautious into towards September, October. I mean, just generally speaking, we're in the middle of summer, right? It's time for vacation, time for the family. If you chase any movement in the market, no, it's not working like this. Yeah? You need to take a break and need to understand that many people simply do that now. Many people are on vacation, so you have quieter markets, you have less volume, and that means also the signals that you're getting from the markets are not that good because less people creating these signals with less people, right?
We'll wait for the summer doldrums to end. Typically, when do things pick up based on your experience? When does volume pick up after the summer? Is it first week of September, second week?
Second week of September, usually, yeah.
Usually, yeah. Okay. Where can we learn more about Midas Touch? Tell us a bit about your research. Actually, what is it you focus on, and where we can learn more from you?
Yeah, you can learn more on my website, midastouch-consulting.com. And you can also join our free Telegram channel, where we have a wonderful mastermind group of people from all over the world exchanging ideas about the markets and helping each other to make money. Personally, I'm into precious metals now for 22 years and for 10 and a half years into Bitcoin. These are the two asset classes that I really focus on. I believe in hard, sound money. I don't believe in governments creating money. I believe in free markets. And I think that the mix of analog, old school, boring, physical precious metals that have survived the last 5,000 years and adding Bitcoin as a digital, decentralized asset is a very good mix to withstand basically these challenging times.
Mm-hmm. Okay, excellent. All right, we'll put the links down in the description below so people can check out Midas Touch Consulting and the Telegram link as well. Thank you very much, Florian, for your time today. Appreciate it.
I appreciate it. Thank you very much, David. All the best for you and the viewers.
Thank you. And thank you for watching. Don't forget to subscribe.